Hi, Group 7, it's Liana. Just doing this really late on a Saturday night. Fun stuff for me. I just want to do a quick video for week 2. I'm just writing up a quick summary. So this is where you get a bit more intricate into accounting. So there's the balance sheets is our topic, statement of profit and loss, and cash flows. So I just wanted to quickly do a video to kind of go over it so you can kind of hear it in person rather than read. So you've got kind of like your 5 main groups for transactions. So every single transaction you have in a company, if you look at a journal, this may or may not make sense, but there's 2 sides to it. So say if I sell something as a business, my cash will go up, but my inventory will go down. And Christy, that also answers your question to the exercise 7 in module 2.3. But I'll write that down in below just in case you don't watch this video. But anyway, so you've got, when you have transactions, they can be classified into 5 different categories. One is assets. Hopefully that's self-explanatory. It's fixed things, like if I turn around and show you my messy apartment, TV, asset. You've got like a little stool and an asset. So in my house, that would be your assets. Liabilities would be debts. So in my apartment, it would be the mortgage I have over my apartment. So that's my debt. Revenue, if it was rented, then the money coming in. So it's money coming in. Expenses is cost to maintain, so say rates and all that. So you can put this all through different like businesses or traders, partnerships. So this applies to everything. And then you also have equity. Equities, I always found a bit confusing. It basically blends in between your balance sheet and your P&L, but it basically says like what's your overall position for your shareholders or whoever owns your business. What's a really good resource if you ever get stuck on anything is Investopedia. I'll just flip you around, show you if you can see that. So Investopedia for me is a great resource. Even to this day, I still use it. They've got really good information about ratios when things start to get a bit more complicated, definitions. It's super easy to read, so highly recommend it. So there you go. You've got your 5. You've got assets, liabilities, revenue, expenses, and equity. Now, then we've got, so there are kind of accounts, and then how do we report these? So we've got 3 different ways of reporting: balance sheets, statement of profit and loss, and cash flows. Now, your balance sheet basically just shows your assets and liabilities. So it looks at what the business has, like physical and debt, as at one point in time. So just look at a snapshot. So it's always in Australia, it's always done as at 30th of June, 2020, 2019, whenever you do it. So you'll always see balance sheet as at whatever date. And in Australia, it'll be 30th of June because our financial year in Australia is 1 July to 30th of June. So it covers a full year. Different countries have different dates. Sometimes you can even select it. When I was working in London, you could basically choose your financial year, which blew my mind for a while. The next is then your statement for profit and loss. Basically, this just shows that your movement in cashes. So it looks at over the full financial year, what money came in and what expenses went out. And then you'll see if there's a gross. First you go revenue, less costs of goods sold. So that's, say, if you were manufacturing, remotes here. So your revenue is everything that you got to sell this remote. Your cost of goods sold is the actual material. Okay, then that gives you your gross profit. So let's say we sell it for $100. It costs us $10 to make, so our gross profit is $90. But then in a business, there are so many other more expenses. There's rent, wages, taxes, all that sort of stuff. So you've got your gross profit, and then you go into your other expenses, list it all down, and then hopefully at the end of that, you'll come to a net profit, which will be, let's say if the rest of our expenses were $20, then our net profit would then be $70. But sometimes you can operate at a loss. You shouldn't be operating at a loss, by the way. I did insolvency for many years, so it's not a great thing to do. but then it will be a net loss. So say if we sold it for 100, cost of goods was $10, profit of say then 90, and then let's say our expenses were 100, then we'll be at a net loss of $10. So I hope that helps. So your balance sheet and your statement of profit and loss is all retrospective. It's also looking at the past. Then we've got cash flows. This is what I personally do a fair bit of work in all my jobs. So cash flows look at the future. So it's projecting. So cash flows can be yearly, they can monthly, daily, depending on what your company needs. So this kind of helps with budgeting. So it looks at, okay, forecasting what costs. If we know that we're going to have this massive bill, then we've got to save money coming in somewhere to pay for it. So it's basically managing cash so we can pay our bills and meet everything on time. Hopefully that all makes sense. I'm just trying to see. Hopefully that gives you a pretty good summary. I'm just going to jump in and see so this week's focus with those three things. Hopefully that gives a high level introduction to each one. I know that this is going quite quickly into like the jumping into the next thing, and if you've never done accounting before, like balance sheet, P&L, like that these might be foreign words. I've been doing this since high school, so I'm pretty used to it. So if you do need more information, just put it down below. If you need to know definition of something, ask me. Investopedia is great. But yeah, just get involved. We've had such a good group. I'm so impressed with everyone. It's really nice to see. But yeah, sorry about the weird angle. I'm just sitting on my couch at 9:30 on a Saturday night. So just trying to get some work done before I head down to the Gold Coast tomorrow and have some fun. I hope this really helps. I'm going to keep trying doing this weekly because I think we've got such a wide variety of people doing this degree, doing the Bachelor of Business, but their majors are so different that their backgrounds may not be in accounting. Like I'd probably say maybe 70% of the students in my group don't have the background of accounting that say I would have, because I majored in accounting. I did all through school. So my aim is to try and break it down in baby steps. If you don't need it, you already understand, ignore the video, move on. But it's kind of good to refresh. But yeah, anyway, if you have any questions, post below. Thanks for listening.